Right. So what is clause 1, Caro 2016? Fixed assets. 2, 3, 189 parties. 4, LIGS, loans, investments, guarantees, securities. 5, deposits from public. 6, cost records. 7, statutory dues. And repayment of dues. 9, end use of money raised. And now what is clause 10? Fraud. Yes, clause 10 is on fraud. You understand, when we had studied SA 240, we had said, na, 10-12 bar. You need to tell everyone that there is a fraud which has taken place. So that thus over there was for clause 10 of Caro 2016. And 143.12 we are yet to see. 143.12, hai na? Duty to report the fraud to CG. Right, so clause 10 of Caro 2016. What does it say? Any fraud on the company. What does it say? Any fraud on the company or any fraud by the company, new entry, by its officers or employees. So external frauds are not covered in Caro 2016. So your supplier did a fraud on the company, your customer did a fraud with the company, right? That reporting will not come under Caro 2016. What does it say? Any fraud on the company or any fraud by the company, by its officers or employees. Yani ke employees, and internal frauds are covered under Caro. External frauds are not covered. By its officers or employees, noticed or reported during the year. Noticed matlab kya? You while doing the audit came across it. Or reported matlab management themselves came and told you, okay, CAC, this is the fraud which our employee did in the company during the year. Noticed or reported during the year? If yes, then the nature. So you see, for fraud you also have to give the nature of the fraud. And the amount involved is also to be indicated. Any fraud on the company or any fraud by the company, by its officers or employees. Okay, new entry. So external frauds are not covered in Caro 2016. Noticed or reported. मतलब पक्का you know कि this fraud had happened. तुमने अपने आंखों से देखा था या management खुद आके they reported to you. That means one thing what I told you, external frauds not covered. है ना? External frauds not covered in clause 10. Suspected frauds not covered. Why? Because what does it say? Noticed or reported. So I think that there is a problem, not covered over here. I think this employee has done a fraud, not covered over here. And immaterial frauds, because what does the explanation say? Materiality is to be considered in accordance with SA 320. So only material frauds are to be reported under clause 10 of Caro 2016. Matlab again, immaterial frauds are not covered. So 3 types of frauds which are not covered in clause 10 of Caro 2016. What are the 3 types of frauds not covered? External frauds, suspected frauds, and the immaterial frauds. Okay, whereas 143.12, it covers internal frauds as well as it covers external frauds. Then what does 143.12 say? If an auditor in the course of performance of his duties as an auditor has reasons to believe that an offense involving fraud is being or has been. So there again suspected fraud may also come. And there the materiality amount has been given. If it is 1 crore or above, then audit committee and central government. If it is less than 1 crore, then only audit committee and board's report. When I come to 143.12, I shall discuss that with you. Do you understand that? So what does what does clause 10 say? Any fraud on the company. Matlab, that employee of the company was sending bogus bills to the company. So that's on the company. Or by the company. Matlab, he, what do you say? Inflated some bill amount. So by the company. By its officers or employees. Noticed or reported during the year. If yes, then the nature and amount involved is to be reported. Right? So external frauds not covered. Suspected frauds not covered. Immaterial frauds not covered. Materiality is to be determined in accordance with SA 320. Audit procedures are to be performed in accordance with SA 240. And you also need to consider the reporting responsibilities under 143.12. And a duty to report the fraud to CG. Right? So this is our auditor chashma. You understand? External frauds not covered. Suspected frauds not covered. Immaterial frauds, no reporting required over here. And materiality to be considered in accordance with 320. You also need to follow the procedures, maintain an attitude of professional skepticism as laid down in 240 and also 143.12, that is duty to report the fraud to CG. Right, 143.12, which is regarding the duty to report the fraud to CG. Right, so that is clause 10. What is clause 10? Any fraud by the company or any fraud on the company. Yes, what does it say? Any fraud by the company or any fraud on the company by its officers or employees, noticed or reported during the year. If yes, the nature and amount involved is to be indicated. Okay, right. So now if you come to this Kingfisher, you understand, as per the information and explanation given to us, old Caro, it was clause 21. No material frauds, now look over here, no material frauds on or by the company and causing material misstatement to the financial statements have been noticed or reported during the year, except for chargeback received by the company from credit card service providers due to misutilization of credit cards. So what is this? The nature of the fraud and the amount involved, 34.02 lakh. Right, so misutilization of credit card by third parties. So now this will not come in the new Caro. Because new Caro, what does it say? Okay, the external frauds are not to be covered. But in the old Caro, this point was not there. But what I wanted to show you anyways is the amount involved and the nature is to be indicated. And the nature and the amount involved is to be indicated. Right, so any fraud on the company or any fraud by the company, by its officers or employees, noticed or reported during the year, if yes, the nature and amount involved is to be indicated. Right, so what does it say? Any external party frauds are not considered for reporting. Then what does it say? Only notice fraud shall be included, not the suspected frauds. Right. Then the nature and amount involved, you should consider the principles of materiality as laid down in the essays. And so I told you in accordance with 320. Then while planning the audit, the auditor should discuss with the members of audit team the susceptibility of the company's financial statements to material misstatement resulting from fraud. He should also make inquiries of the management. The auditor should examine the reports of the internal auditor to ascertain whether any fraud has been reported or noticed. He should examine the minutes of the audit committee if available to ascertain whether there are any instances of fraud. And the auditor should inquire from the management about any frauds on the company that it has noticed or have been reported. Right? Should discuss the matter with the other employees also. And the auditor should examine the minutes book and obtain the written representations from the management. Right, so what does it say? What are the additional procedures that it talks of? Right, one, you need to make the inquiries of the management and the other employees. Right, then what does it say? You need to examine the internal auditor's report. Then you also need to examine the minutes of the meetings of the audit committee, and you also need to take the written representations from the management. Right? Written representations from the management. Right? So we've completed up to clause 10. Which is fraud. Inquiries of management and other employees, examine the internal auditor's report, the minutes of the meetings, and also obtain the written representations from the management. Okay, right. Internal auditor's report. Okay, because from there also you come to know about any noticed or reported frauds. Right. So if I tell you that you need to fill in the columns for date of arrival and date of departure for an evening flight for MNR and PNR. Fill in the columns for the date of arrival and date of departure for an evening flight for MNR and PNR. Right? So fill in the columns, New English. So the columns. Fill in the columns regarding the date of arrival and date of departure for an evening flight for MNR. Right? Fill in the columns for the date of arrival and date of departure for an evening flight for MNR and PNR. Did you understand? Fill in the columns for the date of arrival and date of departure for an evening flight for MNR and PNR. Right? So F for fixed assets, I for inventories, L for loans to section 189 parties. Then loans, investments, guarantees, securities, 185, 186. D for deposits from public. Right? C for cost records. C for the cost records. Then this D is for the statutory dues. Next D is for the repayment of dues. Then E is for end use of monies raised. End use of monies raised. F is for fraud. Then M is for managerial remuneration. Right? Managerial remuneration. N is for Nidhi company. R is for related parties. Right? Then P is for preferential allotment. N is for non-cash transactions. And R is for registration with RBI. Right? Registration with RBI. Right? Copy down. Right? So we have clause 1, 2, 3, 4, 5, then 6, sorry. Right? Then 6, 7, 8, 9, and 10. ये देखो FILLDC DD EF and then MNR and PNR. Right? So one you have to remember is possible. Possible, the exceptions is, and then after that, this fill in the columns. Adjustment you have to do. Right, fill in the columns for the date of arrival and date of departure for an evening flight for MNR and PNR. Now, okay, right, then I'll discuss further. Yes, have you written? No? Yes, fill in the columns for date of arrival and date of departure for an evening flight for MNR and PNR. Now what is happening that NR is coming at two places. है ना? MNR and PNR and 3 Ds are also there, but those you can remember, deposits from public and statutory dues and repayment of dues. But what's the problem? Ki these NR, है ना? So there might be a confusion over there. So do you think of any way? Okay, how do you remember the NR? Because there is MNR also and PNR also. Okay, but still you may miss the sequence, no? So just little bit of change in that. Pehle you have to take a party from Nidhi, and then after that you will give the cash to RBI. First Nidhi से party लेने का, फिर cash to give to RBI. है ना? Nidhi party. So first Nidhi, and Nidhi company and related party transaction, and then non-cash transactions and registration with RBI. So first to take party from Nidhi and then after that to give the cash to RBI. That's just to be kept in your mind. Because what happens after some time, Nidhi company goes at clause 15, and non-cash transactions comes to clause 12. Right? So just to keep that in mind, first Nidhi and party and then after that cash and RBI. Yes, do you get that? So we've already completed up to clause 10. You understand? No, that is fraud. Right, so now coming to clause 11, which is managerial remuneration. Right, so if you would like to see the new entries, which were never there before. So one is this LIGS, loans, investments, guarantees, securities. Then now this clause 11, managerial remuneration. Then clause 13, which is RPT, related party transactions and disclosures. Then preferential allotment, to some extent it was there before. This non-cash transactions is new and this registration with RBI is again a new one. You understand? So old Caro we had that Nidhi Mutual Benefit Finance Company. So now all that mutual benefit finance and all has been removed. Now what we only have is a Nidhi company. So more or less that also I can put it as new one. So these are the like brand new entries. You understand? No changes, no versions of those. Others we see little change. Jैसे fixed assets में we saw title deeds of immovable properties. And for loans we saw that the repayment schedule, whether it has been stipulated. For inventory now there is only 1 point. Earlier there were 3 points for inventory. Then deposits from public, you have to also state the nature of contravention. And cost records have now gone to section 148. There's little change we are seeing, but like major new ones are the ones which I have marked them in green right now. Do you understand? Right? So with that, now I come to clause 11, which is regarding the managerial remuneration. Yes, has everybody written it in their books? All the 16 clauses? Right? So clause 11 is regarding the managerial remuneration. Right? So this is the second set of clauses which you have to study in CA final audit. Now one last set of clauses is remaining. Which last set of clauses is remaining now? No, not of Caro. Caro ka 16 clauses I have said. Other than Caro, which other clauses do you have? Form 3CD. How many clauses? 41 clauses of Form 3CD. So first you had the 34 clauses of ethics. Then now we are studying the 16 clauses of Caro. And then you are going to study the 41 clauses in Form 3CD. You understand? Okay, May 16 exam, they had asked 4 mark ka 2 question, 8 marks from tax audit. Number 16, no question from tax audit in the paper. You understand? So last attempt they had asked for 8 marks and now this one, no questions being asked. Okay, right. So managerial remuneration. Right. So what is clause 11? That's again a new entry, managerial remuneration. Right, never before have we seen in Caro a point regarding managerial remuneration. But we know that in the company, when in IPCC audit we used to do company final accounts, in our notes we used to do one working note for managerial remuneration. You understand? So, whether managerial remuneration has been paid or provided for in accordance with the requisite approvals mandated under section 197, read with schedule 5 to the Companies Act 2013. Whether managerial remuneration has been paid or provided for in accordance with the requisite approvals. What are they saying? In accordance with the requisite approvals mandated under section 190 and under schedule 5, read which section 196 of the 197 of the Companies Act 2013. And if not, it has not been provided for, then again the details of the excess, and look at the new thing over there. Matlab pura hi new hai, but this is like something more different in that new thing. Steps taken for securing refund of the same. Steps taken for securing refund of the excess which has been paid. Details of any excess managerial remuneration has been paid. And it says, bhul jao nahi, excess pay kiya, what are the steps taken to secure refund of the same? So one, whether it has been paid or provided for in accordance with the requisite approvals mandated under section 197 read with schedule 5. And then after that, what does it say? If excess has been paid, then the details and also the steps taken for securing refund of the same. So they say as per the Companies Act, how much managerial remuneration? 11.5% of net profits, no? Okay. 11%, okay, 11% of net profits. So say the company has paid 13% of net profits. So 2% has been paid excess. So again it says steps taken for securing refund of the same. And sometimes there might be a situation that the company is incurring losses. And still it wants to pay the managerial remuneration. So in that case, you require the approval. Sometimes you want to double the managerial remuneration which you're paying. So in that case, you require the special resolution in the general meeting, central government approval or so. Okay, so now say in the exam if a question is asked, okay, a private limited has paid managerial remuneration at the rate of 12% of the net profits. Yes, as an auditor, how will you do the reporting? Yes, as an auditor, how will you do the reporting? Yes, say some such type of question has been drafted. Okay, they have paid 12% of net profits as managerial remuneration, or they've exceeded, they've doubled the amount, but no special resolution has been passed for the same. They've not got the requisite approvals from the central government, and still they are paying this excess managerial remuneration. Yes, tell me, how will you do the reporting? Details of the excess remuneration which have been paid and the steps taken for securing refund of the same. Under which clause of CARO will you do the reporting? Clause 11. Will you do the reporting for this under CARO 2016? Excess managerial remuneration paid? Are you 100% sure? Are you 100% sure? Yes. Managerial remuneration is not applicable to private limited companies. Hence, no reporting is required under CARO 2016. You understand na? नाम में आंसर रखा है a private limited. है ना? Managerial remuneration section 197 and those approvals mandate, the schedule 5, that does not apply to private limited companies. Hence, no reporting. Hence, no reporting is required under this clause. Why? Because it does not apply to the private limited companies. Do you get that? Right. So what does it say? Whether managerial remuneration has been paid or provided for in accordance with the requisite approvals mandated by the provisions of section 197, read with schedule 5 to the Companies Act. If not, state the amount involved and the steps taken by the company for securing refund of the same. Amount of the excess which has been paid and also the steps taken by the company for securing refund of the same. Are you getting? So what you have to remember first, section 197 and schedule 5. First these two things you have to remember. Just clause 4 mein first what two sections you have to remember? Section 185 and 186. Then here you also have to write one more point in the auditor chashma, no? Computation of net profit. You'll have to check the computation of the net profit which has been done, no? Right, so section 197 of the Act prescribes that the maximum limit of payment of managerial remuneration shall not exceed 11% of the net profit of the company in that financial year. Is not applicable to private company, and hence reporting under this clause will not be required. Then managerial remuneration will not include sitting fees, remuneration payable in the form of services rendered for a professional nature, So that will not come under managerial remuneration. Then what does it say? Where remuneration is paid where there are no profits or inadequate profits. Yes, and should be in accordance with the limits prescribed and by passing a resolution as may be prescribed. And there is no default in the repayment of any debts or debentures. Right. If the company pays remuneration to a managerial personnel in excess of the amount, then in that case, what does it say? Central government approval is required. And if I again go to the earlier point, the limit as prescribed shall be doubled if the resolution passed by the shareholder is a special resolution. right? Special resolution and central government. And then what does it say? Payment to the director. How will you report the default? Payment made, amount paid in excess, amount due for recovery, steps taken for securing refund, and also the remarks if any. Right, yes. So what are the points which you can write in your answer? One, in the audit procedures ka part. Right, in the audit procedures part, what is the first point? Again, this is an R raised to 50, huh? Managerial remuneration. है ना? Clause 11. Okay, so that's again a big coincidence in life. Clause 11 and 11% of net profits. You understand? So clause 11 and 11% of the net profits of the company. Then what does it say? Managerial remuneration will not include the sitting fees, and it will not include the fees for rendering services of a professional nature. Then managerial remuneration not applicable to a private company. Then what does it say? In case of inadequate or no profits, whether a resolution has been passed in the general meeting, and if you want to double it, if you want to pay excess of what is allowed, no, for excess special resolution in the general meeting, and if you want to double it, then you need to make an approval of the, then you require the approval of the central government. Right? What does it say? Inadequate or no profits, then resolution in the general meeting. If you want to pay excess of that, then special resolution in general meeting. And if you want to double the amount which is allowed, then in that case again the central government approval will be required. Right? And not applicable. What is NA? Not applicable to private companies. Not applicable to private companies. So very much like in this exam, they asked the question on Nidhi company. So one exam they could now frame a question on this managerial remuneration. First thing to you have to remember is section 197 and schedule 5. उसके बाद बाकी का सब बाद में देखा जा सकता है. But first you have to remember is section 197 and schedule 5. Then 11% of net profits, then managerial remuneration does not include sitting fees and professional nature services rendered, then not applicable to private companies, then inadequate and what excess is to be paid and what if double is to be paid. Right, so that is regarding the managerial remuneration, and then you can also write regarding the computation of net profits. Right, one more point if you want, you can add over here is regarding the computation of the net profits. Right, so that is clause 11, which is regarding the managerial remuneration. Has it been paid or provided for in accordance with the requisite approvals mandated by section 197, the read with schedule 5 to the Companies Act? If not, the amount is involved, the excess paid and the steps taken for securing refund of the same. Yes, have you copied down this also? Yes, managerial remuneration, and then what are the audit procedures? Yes, R raised to 50. Yes. Okay, for double it is special resolution, kya? Okay, so excess. So for double, then special resolution. Okay, right. So if you want to double it, so we can just swap these words. If it is to be doubled, then special resolution in the general meeting. And if you want to pay excess, then central government. Okay, right. Right, so that is clause 11, which is regarding the managerial remuneration. Right, then after clause 11, we have clause 12, which is regarding the Nidhi company. Right, what is the reporting for Nidhi company? Yes, Nidhi company, yani ki again those mutual benefit, you know, which have like a organized scheme fund, you know, which has got like many people who have applied for it, every person contributing some amount per month, and then they getting a prize or what you say, a lottery amount at one go. Right, so Nidhi company. Right, so now what is the next one which we are discussing? Clause 12, which is regarding the Nidhi company. Whether Nidhi companies have maintained their net owned funds to deposits in the ratio of 1:20. Yes, to meet out the liability. So Nidhi funds, have they maintained their net owned funds to deposits in the ratio of 1:20 to meet out their liability? And whether at least 10% they have invested in the unencumbered term deposits, again to meet their liability. Unencumbered. Unencumbered matlab free of any charges. Again to meet out the liability. है ना, to meet out the liability. So net owned funds, matlab how much is say the net worth of that Nidhi? Say 1 crore. So maximum deposit which it can accept is 20 crore. Like in bank we have something called as capital adequacy ratio, na? CAR. You understand, the capital to risk asset ratio, the capital adequacy ratio. Okay, depending upon how much is the capital, there is a restriction on how much deposits and risk can be taken. So similarly, if the net owned funds of that Nidhi are 1 crore, maximum deposits, how much can it accept? 20 crore to meet out the liability. And out of the investments, obviously all the deposits that they accept, they are going to invest it. So it says out of their total investment portfolio, at least 10% to be invested in the unencumbered term deposits. Unencumbered matlab free of any charges, against which no loan has been taken, it has not been offered as a security against anything. Right, so 1:20 and 10% to meet out the liability. So right, here you have 110 and 120, so that is 12 mein 1 2 is there, no? You understand, no? In 12 you have 1 2, so first one is for 10% and second one is for 2 is for 1:20. And now clause 12, which is regarding the Nidhi company. So there one is for 10% and second 2 is for 1:20 to meet out the liability. Now as an auditor, what is the audit procedures you are going to follow? So one, what are you going to do? You are going to ask the management to provide you this computation. You're going to ask the management, okay, please provide us the details of your net owned funds, your deposit liability, because we need to check, have you maintained them at 1:20. So right, what do they say in the audit procedure? What is the first procedure they say? Ask the management to provide you the computation of the deposit liability and the net owned funds. You have to ask the management that please provide us the computation. What are the wordings of the clause? Whether the Nidhi company has complied with the net owned funds to deposits in the ratio of 1:20 to meet out the liability. ये common sentence है दोनों part के बाद. And whether the Nidhi company is maintaining 10% unencumbered term deposits as specified in the Nidhi rules 2014, again to meet out the liability. दोनों के बाद क्या बोला है? To meet out the liability. Net owned funds to deposit in the ratio of 1:20 and at least 10% unencumbered term deposits to meet out the liability. Then what do they say? Net owned funds means equity share capital free reserves as reduced by accumulated losses and intangible assets. Right? So presenting the proceeds of preference shares should not be included in the net owned funds. Then a Nidhi can accept fixed deposit, recurring deposits, saving deposits from its members in accordance with the direction. The aggregate of all such deposits will be the deposit liability. So one, they've explained what is included in net owned funds. Second, what is included in deposits. What does it say? Net owned funds means equity plus the free reserves of the company minus the accumulated losses and the intangible assets, and preference shares not to be considered. And for deposits, what does it say? Fixed, recurring and savings. All three deposits are to be considered. And then you have to ask the management to provide you with the computation. And then it says it has to keep invested at least 10% in the unencumbered term deposits with a scheduled commercial bank, which will not be less than 10% on the second preceding month, which needs to be examined. Right, so that was the question. So I think in your books, what is the question number? I had shown you this question also. And the last one, question number 27. Yes, I had shown you yesterday in the paper. CARO 2016 has made significant changes and introduced many new reporting requirements. In view of the above, describe the relevant clause relating to Nidhi company. Compliance with net owned funds. Okay, they've given that also. to deposits for requirement and the relevant provisions, and what are the audit procedures to be adopted for the verification and the reporting on the same. So what are the procedures? What is included in net funds, net owned funds, what is included in deposits, then ask the management for the computation, and then also check for the unencumbered term deposits. Right, so that is the clause 12. What is clause 12 regarding? Yes, it is regarding the Nidhi company. Then after that, now we come to clause 13, which is regarding the related parties. Right, which is again an R raised to 50. Yes, related parties, which is again an R raised to 50. Very, very important. एक तो वो managerial remuneration and दूसरा ये related parties. Right. So now related parties. What does it say? Two parts again. जैसे ऊपर निधि के लिए भी two parts है ना, 1:20 and 10%. वैसे now for related parties also they have two parts. One, whether all the transactions with the related parties are in accordance with section 177 and 188 of the Companies Act 2013. And second, whether the disclosures have been done in accordance with the applicable accounting standards. Obviously, the applicable accounting standard over here is going to be AS 18. So whether transactions are in accordance with 177, 188 and disclosures are in accordance with the AS. You understand? Transactions in accordance with 177 and 188 and disclosures in accordance with AS 18. They say the applicable accounting standards. And that is why, you know, if you remember when I had discussed SA 550 related parties with you, I told you, okay, now related party answer is going to have three references. One, AS 18. Second, SA 550. And third, clause 13 of CARO 2016. So now whenever, you know, this is the round which you need to take for related parties now. One, AS 18. Second, SA 550. And third, you are also going to make a reference to clause 13 of CARO 2016. You know, which is regarding related parties. Again, this clause has been divided under two parts, transactions and disclosures. Whether transactions are in compliance with section 177 and 188. What is 177? Audit committee, no? Right, and 188 is again transactions with related parties. And then disclosures, whether they are in accordance with the applicable accounting standards. Right, so applicable accounting standard over here is going to be AS 18. Right, so what does it say? Whether all transactions with the related parties, are you seeing it in your books? Right, whether all transactions with the related parties are in compliance with section 177 and 188 of the Companies Act, where applicable, and the details have been disclosed in the financial statements as required by the applicable accounting standards, yani ke AS 18. Right, yes, do you remember little bit of SA 550? Little bit, just to, you know, make your teacher happy sometimes. You understand? Little bit of SA 550, do you remember? Little bit, any part of the standard from anywhere if you remember little bit. Kuch bhi nahi, ekdam blank. Okay, arm's length transaction. Okay, taken. At least something is better than nothing. Okay. Anybody? Anything else? Little bit here and there? Any data creeping out from your mind? Nothing? Blank? Okay. पहले तो RTID, relationships, transactions identified and disclosed. पर यार इतना तो बोलना था कि there are risk assessment procedures and there are responses. Very good. NERP, newly identified related parties. Okay. So first what was it? Understand. है ना? Shivaji Maharaj. है ना, understand the entities, related party, relationships and transaction. What is the funda of the auditor? Directly ask, indirectly check. So you maintain alertness while reviewing the records and documents. This was the ATF na your exam mein. Okay, which are the records and documents which can give you information regarding related party? Bolo. 189 register, minutes of the meeting, investments made during the year, in tax audit reports, confirmations from the third parties, previous year financial statements, list of related parties obtained from the management, life insurance policies taken, legal profession. That's going to be the difference. Abhi tak jo answer points likhoge na, that will make you reach up to 35, 38. And the points which I tell you additionally, that will make you clear CA final. That you are remembering anyways, you know them. So, okay, theek hai. So you assess your situation, okay, I have reached up to this level. Now, aage I have to remember these extra points. Contracts renegotiated during the year. Legal professional advice taken before entering into a contract. Shareholders register. Joint venture, hai na, alliances, associates entered during the year. Right, so these are records and documents which will give you information regarding the related party, and then sharing the related party information with the members of the engagement team. These were the risk assessment procedures. Then we talked about the responses. What was there in the responses? First response of the auditor was for unidentified, undisclosed related party relationships and transactions. So we call them as newly identified related parties. You know, when we asked them how many related parties, they said 183. When we performed the procedures, we came to know more 188. More 5. Then you get total 188 related parties. Then second one, related party transactions, are they outside the normal course of business? ONCB. I think I told you Infosys ka cycle. क्या यार तुम लोग cycle वाइकल भूल जाते हो, Infosys cycle. I told you, no? Related party transactions. You remember what were the 4 points under ONCB? Okay, good. ONCB is equal to? Wonderful. Business rational. Disclosures in accordance with AFRF. Taken. ONCB is equal to ABCD. Who authorized? Who approved entering into such a transaction outside the normal course of business? What is the business rationale? Is it consistent with the management's explanation and whether it has been accounted for and disclosed in accordance with the AFRF? No problem. Next one. Next one. Related party transaction, are they the arm's length transaction? Then after that, next one. Audit evidence about disclosures in accordance with the AFRF and written representations from the management. All these points have been written in the audit procedures over here. You understand? Obtain a list of companies, firms or other parties. Verify the entries made in the register maintained under 189. Obtain a written representation for the completeness of the information. Review the working papers of the prior years. Review the entities' procedures for identification of company, firms or parties. Then assessment of ordinary course of business and arm's length should be done in accordance with SA 550. Then also audit committee approval required for certain transactions with related parties. And based on that, you will do the reporting as follows. And so all the audit procedures which we talk of in SA 550, same are going to be applied here. And please now, please don't forget, because 2-3 days, 4-5 days later, I'll teach you audit of consolidated financial statements. Then again, I'm going to ask you audit procedures for related parties. Because console mein you consolidate what? Related parties only, na? Subsidiary, associate and joint venture. So again we are going to require the points over there also. You understanding now? तो बड़े काम की चीज है SA 550, है ना? Related parties, and anyways the entire standard is an ATF, है ना? Okay, very normal that you've forgotten. Okay, if you would have remembered, I would have been surprised. So don't, I'm honestly telling you, not through any joke, not through any joking aspect of it, but normally. Okay, but now at least take the effort. Okay, right? So understand, then maintaining alertness and sharing. Then after that, NERP, ONCB, ALT. And a newly identified related parties, related party transactions which are outside the normal course of business. Are they the arm's length transaction? Then disclosures. AE is what? Audit evidence regarding disclosures in accordance with the AFRF and written representations from the management. Okay. Right. So that is clause 13. What is clause 13 regarding? Related party transaction. So what is 11, 12, 13? Managerial remuneration, Nidhi company, related party transaction, MNR, no? Right? That is MNR. And now we come to PNR. That is clause 14, clause 15 and clause 16. So let me right now take first clause 14, which is regarding the preferential allotment. Now first thing in the explanation that they have given is that the term preferential allotment has not been defined. You understand? But if the company allots, say, 2% of its shares to Rakesh Jhunjhunwala or Warren Buffett, or they give some ESOP to some employees, then that could be taken as an example of a preferential allotment. You know, say Mr. X purchased a 3% equity stake in the company. So obviously that's also called as a private placement. That's also called as a private placement, or a preferential allotment has been done during the year. Whether it is one in compliance with section 42 of the Companies Act 2013. Whether it is in compliance with section 42 of the Companies Act 2013. And second, obviously in this preferential allotment, in the private placement offer letter, that is the important chashma, chashma point over here. You understand chashma? Specs, audit procedures point. The private placement offer letter, they would have given the purpose, okay, why the company has allotted these shares to this person. So purpose would have been given, okay, why the shares have been allotted. So next you have to do the reporting whether it has been used for the purpose for which it has been allotted. So again over here you will have to check the proposed use, and you will have to check the actual use. Proposed use, from where will you check it? The private placement offer letter. And actual use, you will check it from the books of account. Everybody understands? So this is again a little bit of repetition of clause 9. Is there little bit of repetition of clause 9? What is clause 9? End use of money is raised. There also we said, where any monies have been raised by IPO, FPO, including term instruments and term loans, whether they have been applied for the purpose for which they have been obtained. Yes, and if not, then what does it say? The details and the details of the defaults and the delays and subsequent rectification, if any. यहाँ पे subsequent rectification नहीं है, but यहाँ पे only whether it has been used. वहाँ पे क्या बोलते हैं? Whether it has been applied. यहाँ पे बोलते हैं whether it has been used. Right, so very important keyword in that is private placement offer letter. From where you will come to know the reason, the purpose why this particular money has been raised or why the private placement has been done. And then you need to check the actual use from the books of account. Yes, preferential allotment. Yes, preferential allotment. So now which section of Companies Act has come? Section 42 of the Companies Act. Right, section 42. Right, written everyone? Yes. So what does it say? Clause 14. Whether the company has made any preferential allotment or any private placement of shares of fully or partly convertible debentures during the year under review. If so, whether the requirements of section 42 have been complied with and the amount raised has been used for the purpose for which it has been raised. If not, provide the detail in respect of the amount involved and the nature of non-compliance. But here they have not said subsequent rectification. What does it say? The amount involved and the nature of the non-compliance. The amount involved and the nature of the non-compliance. Okay. What does it say? Preferential allotment is not defined under the Act. This clause specifically relates to compliance under section 42 only with respect to equity shares, preference shares and the debentures. Right? Fully or partly convertible debentures. Right? Private placement as an offer of securities or invitation to subscribe to a select group of persons through issue of a private placement offer letter. So very important, private placement is to be done by way of a private placement offer letter. And whether they have complied with the company's prospectus and allotment of securities rule 2014. So the private placement offer letter, the purpose would have been given. And you need to check the actual utilization from the books of account. Yes, you need to check the actual utilization from the books of account of the company. So proposed use, you will get it from the private placement offer letter, and the actual use you will get it from the books of account. Okay. So with that, we'll stop here for today. Tomorrow we'll complete with the two clauses and then also start with Companies Act 2013.